Thank you very much, Governor, and thank you for all the hard work you've been doing under a lot of pressure over these last few years. I appreciate it.
Thank you.
One of the other parts of the RBA's remit is an efficient payment system. So just to move the conversation somewhere else, you've recently developed a central bank digital currency, and you've got 14 use cases, I understand, that you're going to work on. Just interested in your reflection on where that might go and where, what that could mean strategically for the market, depending on the outcomes of those trials.
Well, they're trials, and some will hopefully be successful and others will probably fall by the wayside, as happens here. But my own view, at least at the moment, is that there are going to be some important wholesale use cases for a central bank digital currency that kind of really behind the scenes that most people don't actually see, but they will improve the efficiency of the payments and settlement processes. I'm still very sceptical that, at least in Australia, there will be a central bank digital currency for retail purposes that we all use to make payments. We've got a very efficient payment system in Australia where you can move money between any two bank accounts in the country in 5 seconds just by knowing someone's mobile phone number. And it's free. So we ask ourselves at the Reserve Bank, how could we offer digital tokens which would be better than that? It would be costly for us to develop, and maybe we could develop them and maybe they would be useful, but at the moment we don't think the public policy case is there. But in the wholesale space, fixing up some of the frictions and inefficiencies in the system, I think a new settlement instrument by us could help, and if we can find a way to help, we will. So these experiments will hopefully give us some good ideas.
Just to follow up there, Phil, on a final question, you sound sceptical. You said you were about the case for a retail central bank digital currency in Australia, but it does seem like the rest of the world's moving a lot faster than what we thought only 6 or 12 months ago. Obviously, China, Europe, the UK, Canada, even the US, there's some noise there out of the US Congress about getting on their bike and doing this because they're worried that China might get ahead of them. If they proceed with a retail central bank digital currency, can Australia afford not to, or do we have to get sucked into that as well?
I don't think we'd be sucked into it. If they do this because they think there's a public policy case to do it, then we would look at the arguments and the experience and decide whether those same arguments apply here. And if this is the way the world goes, then we will be part of it. But at least at the retail level, you shouldn't expect us to be at the right at the front, but we could be a fast follower. Our organisational effort really at the moment is on the frictions in the payments and settlements processes, which are quite costly, and overcoming those, because if you can already move money between any two bank accounts in 5 seconds using a mobile phone number for free, now, it's a very efficient system, and soon you'll be able to use QR codes to do it as well. So if we're going to introduce a new payment method and all the costs and risks that come with that, I want to be sure that the costs don't exceed the benefits. We're not there yet. If we are, then we'll do it, but we're not there yet.